What's up, everybody? Welcome to another live stream, the second one in the same day. And this is a special one. I'm joined today, almost said this morning, today with Doug Boneparth. And Doug has a ton of things to say about crypto, a ton of things to say about personal finance, and he's got a ton of experience to back it up. Doug, welcome to the show, man. And thanks again for coming on today.
My pleasure. Wouldn't miss it. Thanks for having me. Let's rock.
Yeah, man. So let's just start with your kind of personal story, and we'll get into your personal story with crypto. But I just want to hear more about kind of how you got to where you are right now, and I'll bring up some of your experience too while you speak about it.
Yeah, it's crazy. So, I mean, I've been in wealth management, for what seems like 20 years now, just about coming up on 2 decades. I guess one of the more unique things about me from a professional standpoint is, I'm 37, geriatric millennial, but I grew up in this business and I started my professional career when I was 19. So I've had, it's a lot of privilege there. I've had the privilege to see things in the space for a very long time from a very young age, not just as a child, but as a teenager, really, in terms of becoming a professional. And the way you get to do that is, being a second generation advisor, and in this case, a second generation certified financial planner. And while I don't work with my father, and we went our separate ways a long time ago, I thank him a lot for really giving me the knowledge and understanding to be successful in this space. So from 19, I was getting licensed, studying for my CFP. I think I had my Series 7, back then. Ironically, had to drop that for being a fee-only advisor. So it's been a long path. I mean, I moved to New York City after college, October 2008, and I've watched everything kind of collapse and melt down. Nothing like getting off the plane at JFK to start your career in finance and, meet up with your college girlfriend who you want to, start your life with. And pretty much everything's unraveling, right? So we're talking Great Recession. I literally got off the plane and Lehman collapsed that day. So I was like, all right, might as well just get back on this plane, fly back to South Florida and figure my life out. And things were crazy. I mean, they really were. And as crazy as they were, I can't really think of a better environment for someone to kind of cut their teeth and get experience, right? And it was real. Look, people were losing jobs, lives, entire fortunes, entire opportunities to prosper in this environment. And here I am, 24, with no money in my pocket, literally in debt from student loans and a car I had to sell to, CarMax before moving. I had to go borrow money from my mom to pay CarMax to take my car. So I could go to New York with 4 boxes. And that started my New York adventure, really, in the throes of the Great Recession, where I would get incredible learning experience, survive that, and really then start to figure out, well, how am I going to grow a wealth management practice of my own? What did I learn here in this environment? What were the opportunities? And the first thing that popped in my mind is we need a network. So I decided to go to business school at NYU Stern School of Business. Did that, at night, so I could focus on building my practice and figure out, I never wanted to leave that. There was no room to stop for 2 years and begin. That wouldn't make too much sense. So putting myself through business school while my wife was putting herself through law school, I think we were amassing something like $300,000+ in student loan debt to go get those higher education degrees. Pretty classic millennial move. Hey, education's just going to solve all our problems with $330,000 in student loan debt. So we had no choice but to perform. The way you get out of that is really to out earn it, and that was the mission. I knew I needed to build a practice. She needed to become a successful attorney. And if we just kind of kept our head down and worked really hard, we would get there. Yet there's this giant headwind of 2008, 9, 10. So we're trying to do all that in probably one of the toughest economic environments since the Great Depression. We've written a book about that called the Millennial Money Fix, because we wanted to know, we had questions. How did we millennials find themselves in this position? Debt laden, economy not accommodating as far as the labor environment was concerned, depressed wages, and then provide solutions for how to overcome that, right? And really just give a primer for personal finance, which is sorely lacking, in our society, not just here in America, but globally. You don't get this from your school, your parents, and the government sure as heck isn't, introducing just fundamental lessons in personal finance. So we decided to write a book. We knew it would be good for business and great for marketing, as I then would position myself with what I thought was the best opportunity available. So in the middle of business school, I'm thinking like, how are we going to grow a successful wealth management practice over the next several decades? And the light bulb went off as I'm looking around the room of fellow 20-something-year-olds all burning midnight oil to get an advanced degree from a good school. And I was like, these are the clients. These are the people I want to help, and they need help. Look at the situation that we're in. And I just decided, let me invest in them first before no one had money, and this notion of gathering assets to manage them. It's how most people think about financial advisors. Obviously, if you go back 20 years or not even, but we're stockbrokers, and that's just far from what it is today. So I had that epiphany moment. We're going to focus on millennials. We're going to do this through the lens of financial planning. This means understanding all dimensions of their financial life to be able to give actionable advice and help them basically achieve their financial goals. And you could charge for that, right? A flat planning fee provides that value, and you could get paid. And for folks who didn't want to manage their money, you could help them do that as well. And you just kind of roll with that for like a 10-year period of time, and you can build something really special there. I get to work with people that I love to work with. One thing God bless the boomers and all, but one thing I learned from 2008 and 2009 is what it's like to hold the hands of an older clientele versus being able to hold the hands or help out folks that are your age. And it just resonated. It just was more personal, and my heart was in working with us. And you kind of got laughed at for that. It's just like 8-9 years ago. I think the buzzword millennial just came around. Most millennials, including myself to some degree, still find it cringy, but it stuck. Back then when the press was using it, I was like, ew, gross. Like, who wants a label, assigned to them? And I figured, what, this isn't going anywhere. Let's brand around that. So as much as I got laughter, chuckles at saying, hey, why would you? Because it was, why would you focus on a demographic that has no assets or ability to make you money? And I was just like, that's the mentality I don't like, right? You're thinking short. That's so short-sighted. These are hardworking young professionals educating themselves, overcoming these obstacles. I want to bet on them all day long. I know long-term with this demo, with that kind of makeup, we're going to have superstars. We're going to have really, really great clients to help with now, more advanced things as their financial lives grow, whether that's tax planning, estate planning, and all the things that I've trained myself up to be able to do. So that's kind of the genesis of Bonafide Wealth. I left my partner, what will be 6 years ago, come December, to launch my firm that focused exclusively on this. And all the while, building out really a mainstream media and even non-mainstream media marketing machine, not just with the book. So when you get first mover advantage, and you're in New York City and you have a degree in public relations and communications, you then somehow find your way into knowing how to pitch editors, reporters, producers, for something that's rather unique at the time. No one was really covering the financial affairs of the generation. And, clip by clip, line by line, opportunity by opportunity, I just started to, somewhat dominate the financial press when it came to issues around wealth management for millennials. And that's how I got on the CNBC Financial Advisor Council. You get awards. You also do a lot of volunteer work and leadership positions. And you just do as much as you possibly can, because when you're young and working in wealth management, credibility is probably, the thing you need the most. So yeah, it was a credibility grab, and now I'm 37 and been doing this forever, and the firm's 6 years old, and it's working. It's working. The growth has been great, and there's a huge crypto story in here too, because I know the audience is all about crypto, and we're gonna get there. And you guys are gonna love this. It's not, you got this boring old millennial talking about wealth management. We're gonna talk about crypto too, and how really that has become. I've never seen an asset be born, in my career, a new asset class being born. And now, the amount of questions, inquiries, and the appetite out of, basically retail investors and clientele that either want to know about it, want to allocate to it, or figure, or just be educated about it. And that's been a constant conversation that we've had certainly over the last 2 years. And if I, could throw out some stat that I'm just making up here, 5 years ago, 1 in every 10, maybe 4 or 5 years ago, 1 in every 10 prospects or clients would have some kind of inquiry about crypto. And now it seems like it's 5 out of 10, 50%,
Wow.
either having exposure, wanting exposure, or having lots of questions around it. Name me anything, in our lifetime, that has done that in kind of the asset class space, or just from an investment point of view. So that's super cool. And we're going to dive into all that. That's the story though. I mean, well, personal stuff. I live in New Jersey. Offices in Manhattan. I'm the dad of 2 amazing young girls. So, when we wrote our book, we wanted folks to understand how to achieve the great things in life, which really aren't too different generation to generation, right? As I think really it's technology that separates the generations and how we're able to use that. But everybody wants to be happy, and everybody, wants to feel like they can do some fun stuff and not have to work their entire lives and bring kids into this world or start businesses. And those are the things I love to help people with, because they're inevitable and they take a lot of planning to get right, and execute on. And we're all busy and we're all emotional. So there's always value in working with great advisors and great planners who can help with that stuff. The investment side has gotten commoditized. So, clients who can do it themselves, awesome, get it done, be consistent. And if you can't do it yourself and don't want to do it yourself, there's plenty of ways to go about, investing either through the robots or through real people to help you do those things as well. So there you go. That's the diatribe of the origin story. I'm sure I've left out so many, fun parts of this that literally is a journey. I mean, I just gave you 14 years of my life, more or less there. So we can talk about any part of it, but I hope that was a good summary.
No, that was excellent, man. I really appreciate that, and appreciate everybody who's on with us right now. Make sure you hit that like button if you forgot to do so. Just tap that real quick. It really helps us out. And yeah, Doug, we're definitely going to get into crypto because Doug and I were talking a little bit off air. He got into Bitcoin super, super early. So we're going to get to that. But thinking a little bit more macro, and again, there's going to be a chance for everybody to ask some questions toward the end. So if you want to start those rolling in now, I'll be able to scroll back and check those out. Definitely want to let everybody else ask questions. But I want to start with this, man, just in the environment that we're in right now, with inflation and recession fears. What are the best things or the best advice from your point of view that people can do, and millennials, but also people outside of millennials? I would say the mass majority of people on this channel are millennials, but even looking out for everybody here, what are some things that you would tell people to be focused on, to be doing right now in terms of building wealth during these tough times?
Yeah. So I'm glad you're asking that question because, I'm not going to say like, oh, I've been waiting for this environment. No, nobody wants to, cheer for a recession. The sentiment's so bad right now. It's almost like people are talking their way into, rough economic times. But the pendulum swings both ways. You just had a 13-year bull run that ended with 2 years of basically, pumping so much liquidity into the market. It's almost like drugs, right? Like, and the drug being liquidity and quantitative easing and low interest rates, creating this environment for almost all assets to perform fairly well. And now comes the drawdown, right? Now comes the withdrawal if we're talking about substances here. So I'm not rooting for a recession. I'd love to avoid it at all costs. But the thing that I'm sharing with all my clients is twofold. There's 2 themes and they oppose each other. The first one is get those fundamentals as tight as possible, right? This is where we want to value safety, because the biggest risk, I'm going to be very clear about this, guys, the biggest risk, financial risk that you face in these periods of an economic cool down or a recession is unemployment risk, right? Is the income coming in. Like that's our biggest asset, is our ability to make money. It greases all wheels, right? It pays your bills and allows you to save and invest. And if that goes away, right now we're eroding our financial base, right? We're using our cash reserves, which I hope we have. We'll talk about that. Or we're using our long-term assets that we don't want to interrupt because they need to compound. And that's, again, destructive or has us move backwards financially. So that's the biggest risk out there. And the way you mitigate that risk is focusing on liquidity. Interesting thing to do in an environment where you got 40-year high inflation. Cash isn't necessarily your friend from an asset point of view, but from a sleeping well at night point of view, like cash definitely works there, right? So being traumatized from the recession and from the pandemic as a young father. Look how you got two traumatizing events for all my older millennials out there. God damn. We haven't even begun to unpack the psychological damage of this last one. We've already been coping with 2008 and 9 for a decade plus. Protection definitely has a premium in that cash. So 3 to 6 months living expenses. So we'll get to that in a second, but 3 to 6 months of your living expenses is that textbook definition of a cash reserve. I've been 9 to 12 months historically throughout my practice, which is pretty bulky. Now, because of inflation, I've actually reduced that to 6 to 9. So still 2 to 3 times heavier than what rule of thumb would tell you. And I want that money there, not just to help you sleep well at night to cover emergencies, but also to have it there to help you take advantage of opportunities. And that is the other theme that opposes this theme of protection. So before I get to opportunity, let me wrap up basically protection. So there's things you can do and things you can't do. Having your cash reserve really getting tight, not spend less. I'm not saying austerity. I'm saying shore up the numbers. Really know what that monthly expense is, right? This is the time to be very critical and analyze where your money is going. You should almost always be pretty intimate with cash flow. So 2 sides of the cash management coin: cash flow budgeting, and then just liquidity, how much cash on hand. This is your biggest friend here and will help you do really well in any tough environment. Now, things that you pseudo can and can't control, from the job perspective, be a great employee, head down, work hard. At the same time, you could be at a firm where it doesn't matter how hard you're working. Tough time for the firm means tough time for the employees. So figuring out how to hedge a pink slip coming your way if you're a W-2 employee. And then obviously we have our entrepreneurs who are running their own businesses that have to take a different, approach to how they're going to mitigate the risk of business slowdown, because that will impact revenue. Let's stick with W-2 for now. Do what you can to just be that employee. I'm more worried for my clients at your growthier VC-backed startups that haven't raised money in a while. Less concerned if they just raised or they have a big, an anchor, VC, versus clients that are at Fortune 100 companies with large balance sheets and free cash and they make money. Doesn't mean they're immune. It's just probably a safer place to be at the moment. So conversations around employment are a huge, huge thing, or at least an audit. Do an audit of your own employment risk, regardless of where we're going here, and see if there are things you can do to mitigate them. So that's what you can do 100% in your control, and things that may or may not be in your control. So that's theme number 1. Let's protect ourselves. Yep. Because not only do we want to do that normally, because this is the real point, because of the opportunity. Right? We can take advantage of opportunities when we feel like we're in control and as safe as possible, because it's going to take some guts, because our brains work like this, right? You guys have probably heard that expression, the stock market's the only store people run out of when things go on sale, right? People get scared. That's why they clam up. They stop spending. They keep cash. You just saw the assets that you are supposed to be investing in for your nest egg, for your long-term growth, right? To build your wealth, they're all down. They're all cheap now, or cheaper relative to where they were. Give me an index, S&P 500, bear market territory, just breaking back through 20%. If you're talking the NASDAQ, 30+%. You want to get individual stocks, quality growth companies are down 60, 70, 80%. Holy shit, right? So if you're I don't know what you're waiting for. It looks like great entry points around here. I love how it says not a financial advisor, scrolling across the bottom. Ironically, today you got a financial advisor. Yeah, but I'm not. But I am, and this is all not financial advice. So we got to throw that out there too. So that's the irony here. Yeah. But this is the time in which we want to be opportunistic. So I'm categorically going across my book of clients, and these are folks that have that do well. They're not completely immune to unemployment risk, but there's big cash goals that have been accomplished, like settling down and buying homes over the last few years, and starting families. And now that those big cash goals, right? So typically it's like, let me just build a cash reserve. Oh, I want to settle down. This is like the natural order of things from 20s into 30s, guys. Like, oh, okay, I need to leave the city, or we need to buy that house. And in this particular environment, that shit's real expensive right now. You got to save a ton of cash to be able to do that. You want a $400,000 house, 20% down, 80 grand, and not be penniless after you close. So it's 80 grand plus closing, plus furnishing repairs, plus 3 to 6 months of cash reserves. We're up to like 200 grand in cash to go do that big part of your life. It's insane when you say that to a lot of people for a $400,000 home. What about like a $1 million home? So you can understand how this is all now kind of connecting there. Getting a little off base here, but now the clients are getting to a point where we can find free cash, and you gotta seize the opportunities that I think are here right now and will continue to avail themselves maybe in a multi-year period. Capitulation will bring us down further. If we hit that, there's the real probability that stagflation. We just kind of are in a low growth, high cost environment, and we trend down 20, 25, maybe even 30% for a multi-year period. You can scoop up assets consistently down over a multi-year period, and hopefully be able to take advantage of that. So I'm being really aggressive for the first time because, guys, 13 years ago, the last time this happened, that's my point. It doesn't happen a lot. It doesn't happen often. The last recession was 13 years ago. The psychology of that has totally ruined it for a lot of people because now we've anchored our biases and it's called recency bias or anchoring bias, where we think the next one is the last one. That's once in a lifetime. We got to be very clear of that. Social media and the way, like, we didn't have, this in social media. We didn't have the media apparatus, in place today that we did back then. Can you imagine if this existed, if Twitter in its current form and other social media channels, Instagram, what have you, TikTok existed in 2008 and 2009? Oh my God.
Yeah.
I don't think there's a lot of good that would have come from that. Probably more bad. There would be good. So, here's the opportunity, guys. And if you're in a position where you got your fundamentals down, you have that cash figured out, and now you can afford to put cash or free cash from either cash flow or excess cash that you have on the books and start to average in, this is exactly, and a lot of you are probably index investors. I believe in passive investing, because I think it's hard enough just to be disciplined buying and holding. It's hard. Don't think it's easy. It's not. And it's exponentially harder to think about trading and be an active investor, right? So for most retail investors, 99% of them should focus on getting good at the passive game because it's hard enough as it is, because everyone does well on the up. Cool. And buying assets as they go up, right? Last 2 years, we were watching Portnoy, pull Scrabble tiles out of a bag and make money. We were watching monkeys throw darts. You could buy literally any asset and crush it, and you thought you were the next Warren Buffett, and you got ridiculed for being like, this all is not going to end well. Of course it's not going to end well. It didn't. Here we are with it not ending well. And certainly in NFTs and Web3 and crypto, you're seeing consolidation that's far, far heavier than the regular capital markets, right? And obviously, unless you picked commodities at the beginning of the year, you're losing money. Even if you're in cash, inflation's crushing you. So look, guys, this is why I'm so excited, despite the bad news, because we have to get the word out there that if you do a good job building a strong foundation, all right, that you can really take advantage and build wealth for yourself here. They don't come around often. 13 years ago, last recession, now I'm being redundant, bear markets 1 in every 4 years, guys. Those are the stats. Those are the stats. So you want to wait another 10 years to get assets cheaper? You're not going to compound, which is why if you play that passive game, what you really need to be great at is buying on the way down, is buying those cheaper assets. Everyone can do it on the way up. Not everyone gets good enough to be consistent on the way down. And the way you do that is just being super solid, disciplined, strong foundations. Guys, all the boring shit, that's what you need to be an all-star at. And if you don't like it, best of luck to you, because you're going to have to just be right a large degree of time that you're most likely not. The odds are not in your favor there.
Yeah. No, I love that, man. And let's shift kind of into crypto. We're talking about opportunities. We're talking about the markets across the board being down. And it's interesting because crypto here in 2022, as you well know, Doug, has followed traditional markets unlike any other year. And you've been around for a long time. I want you to kind of give the backstory there that we were talking about off air and kind of bringing us up to speed on crypto and where you see the opportunities that lie within that space too.
Yeah. So just to be very clear and cover my own ass, it's the regulators have put investment advisors in interesting position when it comes to talking about crypto and digital assets.
True.
Yeah, it sucks because I know a lot and I have a responsibility to educate. So
It's a great tweet, by the way.
Yeah, that's it's a rough morning for addicted Twitter users.
Dude, tell
Um,
me about it.
yeah, my dopamine fix came late. And by the way, I see a great question in the comments I want to get to from Daniel. So what up, Daniel? I definitely want to answer that.
Awesome.
Let's talk about crypto and like opportunities. So just covering my own ass here for a second. We can educate all we want, and I'll do that. And I've gotten very good at that. But in practice, it's frustrating. I cannot give a solicited recommendation to a client to buy any digital asset. They can call me and say, hey, I'd love to take a position in, let's say, Bitcoin. The only tool I have from your standard brokerage kind of experience here is Grayscale, and that's a fine solution for a lot of people. I'm a pure play person. Go buy it directly if you're gonna do it. Learn, and I want you to learn how digital wallets work. There's a whole ecosystem of new stuff you got to figure out. And that's the indoctrination of crypto, which honestly, there's been better user experiences and design depending on what we're talking about. I think the bigger exchanges, the Geminis and the Coinbases of the world have pretty much made it, similar to go buying a security like on Schwab or Fidelity or something like that. So that's good there. But as far as
real quick, do you think that will shift once we get like regulatory clarity on crypto, like that you'll be able to talk about it more and more freely?
Yeah. 100%. I'm waiting for one thing to happen, and that's the Bitcoin ETF, a spot ETF to come out, which has been total bullshit why it doesn't exist. So we have a futures ETF, we have shorts. Every other country but America has a spot ETF. This is, shy of putting my tinfoil hat on and saying some things, about regulatory bodies, which I really don't want to do. It's just, I'll sum it up with, it's frustrating because that's the green light, thumbs up. Because if you can put a spot ETF for Bitcoin or Ethereum in a standard brokerage account, you saw those inflows on the futures ETF as the biggest debut of an ETF in history. Can you imagine? Now extrapolate that. What's the spot? It's going to be stupid, massive. And that's the best way. That truly is the best way for most retail investors to get exposure. Period. Whether you're a traditional maxi or like big, it doesn't matter, guys. I feel your points. I get it. Probably not the way I would own it as someone who's been in the space so long. But if you really want mass adoption and mass exposure, you got to go put it into the thing. And I think that's a larger theme for all of crypto. Stop creating like new ways to do it and, kind of plug in like, unless you're giving people, I keep holding on my phone, like it took them 10 years to figure out how to tap an icon on their phone and it just works. No one cares how the sausage is made, guys. Make it easy for the user. So that's what I'm waiting for. And because that's also the green light from the SEC for advisors to give recommendations. So wait, I can recommend a futures, Bitcoin ETF, assuming your compliance department says okay, but I can't, give a recommendation for someone to go buy a digital asset on their own in a digital wallet.
Yeah.
Right there, we are so early. There you go. Like you can actually use these trite crypto expressions that we've come to love to apply to real issues. And that's how I choose to use them. So let's now pivot over to, so that's what I'm waiting on. I think that really opens the door to what investment advisors can and can't do from a recommendation standpoint and just, feeling comfortable. Most advisors, by the way, their compliance offices won't even let them talk about crypto in a sentence to their client because, we're talking firms with tens of thousands of investment advisors or financial advisors that when you build compliance departments around that many advisors, you build it around your biggest idiot. So it's almost like, hey, maybe we can trust 20% of our advisor force to talk about it, but we can't trust the other 80%.
Yeah.
We're just not going to, it's too much risk. We're just not going to talk about it.
Real quick, before we get into your story, because now you got my wheels turning. Do you think that's the tipping point for widespread crypto adoption? I mean, I think we're early for sure. And we're obviously gaining ground these last couple of years for sure in terms of adoption of crypto. But do you think that's the tipping point once people have an ETF?
Tipping point, we can use whatever word we want. I think it's a keystone or a cornerstone of getting to the next leg of adoption, right? Sure. To really showing that, and we're talking particularly Bitcoin here, and a lot of where my head is at in crypto primarily revolves around Bitcoin and Web3 and the NFT space, but more the Web3 underpinnings of how NFTs would be folded into the larger crypto conversation and the greater infrastructure around crypto. But yeah, I think that's a cornerstone for sure. Giving that kind of accessibility. Again, just very frustrating. What you can buy a triple levered, small cap index, but you can't get a spot. Talk about volatility. You can't get a spot Bitcoin ETF. Get out of here. Crazy. So very frustrating. But it hasn't stopped us from educating our clients around it, so they can put themselves in a position to make the best decisions for themselves as possible. And if you have conviction, to specifically Bitcoin or crypto, and here you are in our next winter cycle, whether you want to call it nuclear winter or just winter. I've done this so many times at this point, welcome to the club, everyone. How many, let me know when it's an 80% drawdown. I think I've done that 3 times, with Bitcoin already. So I'm not really moved here too much by, 50, 60% drawdowns.
Real quick on that point, do you think the 4-year crypto winter cycles that you've grown accustomed to, do you think those are still intact, or do you think because we've had this nice push the last 2 years that the bear markets will last shorter time frames?
Yeah. I know every, there's a lot of bias in this because I want them to be shorter. So try and discount what I'm about to say due to just the inherent bias that I have, or anyone who's holding, hodling, anyone who's holding would love to hear me say, I think the cycles are shorter. But just using some logic and reason, you could reason your way into thinking they should be shorter because there's more certainty, there's more institutional money, there's more infrastructure. And when we talk about crypto, guys, you got to understand, we're still building out infrastructure. Look what's happening right now. It's got to, a lot of this has to grow up still. You have exchanges offering first of all, there's a lot of bullshit going on across the board. Look at the consolidation that's taking place right now. Celsius is about to go, bankrupt. We got, people on the run, in Asia from their exchanges and crypto hedge funds blowing up. This is middle school shit. And let's just go with, forget all that drama. Just know your customer, 100+X levered. What? Stop. Stop. That's actually not helpful. That's casino on crack. The stock market's already a casino. We don't need Adderall infused casino existing here to get people to understand that this is a serious asset class that's going to be indoctrinated and become, a place of value for a lot of investors. We got to grow up past that. And I think that's where we are right now. So there's tons of pain that gets distributed in order to get us to, the next cycle. And that's what we're in the middle of right now. Guys, I never cheer for these things, but I think a lot of them are inevitable happenings, right? In order to get to hopefully where we all want to be, right? And that's a way to, look at crypto as a real deal, serious, asset class that's being used at retail and institutional levels. And we can shake off a lot of the stigma and bad marketing and really just, stuff that needs to go away. There's too much of it, and everyone, and if you're in denial about that, it's going to be tough for you. It's going to be tough for you to be a long-term investor in the space.
Yeah, no, I agree 100%. All right, so finally, let's get to your background on Bitcoin. I mean, those were all great comments too, and I had to ask a couple of those questions. And guys and gals out there, if you guys have questions, drop them in there. I'm ready for them too, so we'll integrate those in. And thank you everybody out there for tuning in here. Make sure you guys hit the like button. That really helps us out. But Doug, your background in crypto goes way back, man. So tell us a little bit about how you got started with crypto.
Yeah. So kind of stepped in it by chance, as most great stories sometimes start out. But I got a phone call from a childhood best friend of mine circa 2013. I think I just got back from my honeymoon and getting married. So we really didn't have any money left after that. And I got a call from my best friend, and he goes on and on about internet space money and hash rates and Bitcoin. And you got to understand, it's the first time in my life I'm hearing these words. It sounds nuts. And as someone who, works in wealth management, I kind of have a knack for understanding when someone's about to ask for money. And sure enough, I just cut to the chase. I'm like, Seth, what do you want? What are you asking for? He's like, we need to buy a 2 terahash Bitcoin miner. It's $6,000, 50-50. I'll run it. You don't need to do anything. You're a limited partner. I'm general partner. We're gonna mine these Bitcoins, and 50% of what we mine will go into a digital wallet. But the caveat was, I need you to learn with me along the way. when you come down to Austin, Texas next, we'll go see where they're building this thing. I'll show you how, digital keys work and digital wallets work, and we'll set you up. And looking back on that, what an amazing opportunity, right? So we did buy, there's some fun stuff about this story. We did buy the miner. At one point in time, you could sell, while we were waiting for our miner to be built and delivered to us, you could sell the rights to it on eBay for $10,000. And I just, being, someone in finance, I called my friend. I'm like, bro, sell it. That's $4,000, and then just go buy the Bitcoin. Like, we're gonna make it's an instant $4,000.
Yeah.
He's like, no, and look, he really wanted to run it and do it. And then I was like, all right, you're general partner. You get to make these decisions. I don't. So we set it up. We pulled our hashing power with other miners, and sure enough, I wish I could tell you I mined enough. You got to understand, 2 terahash goes obsolete. So we received the miner 2014. That thing was a paperweight within 6 months, because the algorithm just gets that much harder to solve. So in that 6-month period of time, we pulled enough Bitcoin out to say, hey, that was really great. I wish I could tell you I was a billionaire or even millionaire from it. Won't tell you what it was, but it was good. It was good enough to hold on to. And you got to remember, this is now 2014. What are we at? $400 to $600, a Bitcoin.
Yeah.
So I'm barely break even, I think, at this point. Now someone can figure it out and do the math. So I didn't really think about it. It just stayed in a digital wallet. And 2017, November 2017 rolls around. Now everyone, your mother and grandmother, is reading headlines in the New York Times and Wall Street Journal about this thing called Bitcoin that's gone up to $20,000 before 3K winner, right? And then, of course, that brings us into the next cycle that we just seem to have finished. And now we have a fresh one. So that's been my experience. Not a lot of folks in general can say they bought a miner, and have been in this space for 9 years. This is why, if you're trying to troll me on Twitter, this is why I love making jokes. I play both sides. This is why I love making jokes like that on Twitter, because people are, maxis come out and get all really upset, and I just absolutely crush them in terms of, just knowledge and breadth and exposure. And by the way, if they're down, I'm probably down much more than any of them. So let's not pretend I'm not experiencing any kind of pain there. So that's the story. It gave me a really good education. I was able to take that and directly translate that into ways to educate my clients about the space, so they understand what they're talking about. In a time when most advisors wouldn't touch it with a 10-foot pole. I have a younger demographic, clientele. So there was no avoiding it. I think I would look really bad if I couldn't address questions at a detailed level about it. I've held every Satoshi I've ever mined to this day. I've added to positions here and there. Ethereum is another position that mostly went into exploring the NFT space and having a lot of fun and doing it for the vibes, ultimately to build our own Web3 project, which we're looking to get off the ground. It's always two steps. You think investing in crypto is hard. Try building in crypto. That's next level difficult, and a lot of fun, especially when you know more about the space. So it's been a blast, but also, like, you ever get to the end of a project and you're just like, come on, can we please just cross the finish line?
Yeah.
So that's the background on crypto. It's been 9 years in the space, and amazing to see. Some other commentary I have on it really is, I try and be very objective with what I see. And while I guess you could say I'm a Bitcoin bull, I'm really rooting for it here. I have plenty of skin in the game. There's a lot I don't like in the space as well. I think crypto in general has a gigantic marketing problem. Obviously, it's not like a company that controls marketing, but the way that people, so the maximalist behavior, not a very big fan of. I was talking with you before this. It's like crypto's like Bitcoin. Crypto's like the only religion. I know I'm trying not to interchangeably use crypto and Bitcoin. It's just, you guys probably understand.
Yeah.
What I'm trying to do here. It's like the only religion on that I know of that like hasn't figured. Every religion on earth has figured out a way to like bring you into it in some kind of, hey, like, here's your savior. This is good. Here's some candy, kind of thing. This is the one where it's like, hey man, F you for not understanding what we understand.
Right.
You're not gonna make it. It's like, yo, that's condescending, guys. Like,
100%.
you're pushing you're literally pushing people away from the very thing you need, which is the indoctrination, right, of this thing. It's so
Yeah.
mind-numbingly dumb to me, so stupid. And guys, whoever is like that, I actually understand where you're coming from. I know that the origins of these feelings come from Occupy Wall Street and not trusting a system that hasn't worked well for you, and the bailouts and all of this. And we saw the echoes of that reverberate with GameStop and AMC, which also feeds into that same narrative here of David versus Goliath. I totally get it, but the thing you want, if you're putting your money into these assets and you want them to do well, you need people in the pool. So why are you behaving in a way that is trying to keep them out and make people look at this space and go cringe?
Yeah.
There's and whether it's Bitcoin, whether it's NFTs, ETH, altcoins, shitcoins, whatever, guys, there almost seems to be disproportionately more cringe than there is legitimacy and intellectual conversations about pros and cons that would help its proliferation. And you're just not doing, you're not doing yourself any favors here when the attitude is, a la maximalist or a la zealot religious focus. It's real. That's another really frustrating point. So I would encourage everyone here, go teach a friend, don't shove this down people's throat. I have very casual conversations with my friends. My wife's an excellent writer. She wrote an amazing piece that, she realized her friends were too afraid to ask and wrote a primer about it. Go write a blog post about it. Go tell a parent, a friend, a sibling about it in a way that's not threatening. That's like, hey, check this out. I think this is pretty interesting. I just want you to know. I just want you to maybe go buy $10 worth of Bitcoin on an exchange so you can understand, because a lot of the learning is how to operate in the infrastructure.
Right.
$10 isn't going to do anything. Go buy $10 worth of Bitcoin on this exchange. Go get it on your phone. Trust me, even if you don't believe in digital assets, operating in this infrastructure is going to give you a leg up, because this is coming whether you like it or not.
100%. So we got a couple questions out there, but I want to ask you this one, and then we'll jump to some of those. What do you think the best case and worst case scenario is for Bitcoin in the next, let's say, from now until 2030?
Right. So I view Bitcoin as digital store of value, digital gold. I really don't take it too much further than that. That it really is viewed as a substantial digital store of value. Best case, that is as good, if not better than gold. So you got a $10 trillion market cap for gold. Do the math. I think that puts you at $600,000 at Bitcoin if you think a $10 trillion market cap. My math could be wrong. This is the last time I remember doing it. That's substantial. I mean, that's mega, guys. So now you have you truly do have digital gold. And of course, there'll be volatility still. If it's better than that, go ahead and daydream with me as to what multiple you want to put on the 10 trillion. You want 20, you want 30, you want Bitcoin at 2 million. Let's go. Like, while we're shaking the magic 8 ball, your crystal ball is as good as mine, guys. But best case, it really is viewed as, something as good as. So that's a $300,000 to $600,000 price range. That's not my prediction. That's saying if you believe it's half as good or as good as gold. And I love using real proxies like that. I'm just not bullshitting some number to you. I'm saying relative to what I think its closest thing is, right? In this case, I believe, store of value, digital gold. That's where I'd have it. Worst case, it really falls out of favor. And it isn't as good as people think, that commodity is. And you hit some steady state price that's roughly around where we are, maybe $10,000, $20,000. And people just know, cool, there's this thing, Bitcoin, it does, X, Y, and Z. And everybody knows that everybody knows, it's somewhere between, this sad price and this sad price, sad relative to where everybody wanted it to be, at least bulls wanted it to be. I guess, if I'm being really objective, worst case is zero, guys. You don't want to hear it. It's zero. No one gives a shit about Bitcoin anymore. Or, Satoshi jumps out from a bush and says, "Got ya." I don't really think that's it. But someone corners the market. Someone, price manipulation becomes a real big problem because someone has too much. Hey, Michael Saylor. Hey, FTX. Something like that. All possible. Again, crystal balls are all viewing the same, unpredictable future as mine. So that would be my answer on best and worst case scenario. I think that's pretty practical.
Cool. So let's get some questions going from the audience, and if y'all have some out there, drop them in here. So Jason wants to know kind of predictions, and everybody wants to know price predictions. And Doug, I'm sure you hear it too on your side as well. Everybody wants to know where it's going. 2024, right, is the next Bitcoin halving. So a lot of people have that year and date. I mean, is it in 2024 where we'll see new highs and the big number that everybody is eyeing is 100,000 right now, right?
Yeah, I think people are picking a nice round number. I think they're using an event that I don't think has really, been a factor for price movement based on the last, the happenings baked in. Who knows, guys? What you need here is the expansion of infrastructure, the placement of more Bitcoin on the balance sheets of companies and in individuals. Stop, fantasizing and just focus on the fundamental things that need to take place for you to say Bitcoin should be worth 100,000, 200,000, or whatever. You have something that's pretty straightforward here, a scarce, commodity that's price is based on largely speculation at this point. And I'll throttle that back a little bit. A price that is created by the demand of what market forces deem it to be. But people get angry when you say it's all speculation. Guys, I don't know how to remove that from the equation, guys.
It is speculative, right?
It is. So that's it. Scarce commodity, that's price is speculatory. Does anyone? But the network. But what you can build on it, yeah, that's cool. That's exactly, build it up, build it up. Let's get transactions to be in a nanosecond and half a penny, and everyone has a digital wallet on their phone. Let's get Apple, let's get your digital wallet here to have, the opportunity to send digital currencies. I mean, you got Jack Dorsey out here with Block, trying to make these things happen as far as payments go. So they're building, building, and again, we are so early.
100%. Let's go back to Daniel's question. So this is one that you mentioned you want to bring back up. Has the meaning of value changed with millennial investors? I continually see everything from art and precious metal to real estate being viewed like a non-factor over my parents' generation. Really good question, Daniel. Thank you.
Yeah, Daniel, I did like that question a lot. We are seeing through technology, through primarily financial technology, access to asset classes I don't think a lot of people have had access to before. Like you got Masterworks out there doing fractionized investment in fine art. Go get a Basquiat or a Monet and invest in this, and that's historically been impressive returns. Also, arts and collectibles, pretty big ask and bids here. But now you have technology and firms that are able to allow retail investors into stuff like that. Same with real estate. I think you have Lex out there that does commercial, grade A commercial real estate across major metropolitan areas. You can fractionalize that. I do see millennials and younger generations have a greater appetite for alternative asset classes relative to older generations, and that shows up in the data. I think all alternatives have expanded from 6% of the total asset pie to about 12 or 14% over the last 10 years. That's a big move. So people are looking for greater ways of diversification. I think technology is allowing retail investors to have greater access to that. Gotta love that. I do like that. There's always places and time, there's the right place and the right time for getting exposure to digital assets and alternative, digital assets falls under that umbrella, of course. Digital assets and other real assets or collectible assets, anything in the alts umbrella. I think we're going to continue to see that trend continue, greater allocations to that over time, over the next 10 years. So I just don't think our parents and grandparents had necessarily the kind of, they've always had access to real estate. That's been one that, people have, find anyone who's escaped the country due to persecution. They're not investing in capital markets. They're investing in real assets. So a lot of this gets taught down, from generation to generation. Hope that answers the question. Great question.
Yeah, that's really good question. Scott has one too. What's your favorite esoteric / underrated asset class out there?
That's a great question. Coffee beans. No.
And we're gonna get to that.
NFTs.
Yeah.
Probably crypto. Probably crypto.
Yeah.
Just because it's such a you either love it or hate it type thing. That's just because it hasn't come in. That middle ground has yet to form as much as it should, because we don't have that mass adoption and I think mass integration into it yet. So let's go with what we know here in that space, crypto.
Steve's got a really good one too, and I don't know how familiar are you with the ISO 22 coins out there that are like they're all geared toward creating this global payment system that XRP Ripple had created.
Yeah, Ripple wrote that. Sure.
Yeah, so I think this question kind of is aimed at that. Do you think XRP HBAR, which is another one of those ISO 22s, will be adopted by banks and overtake the SWIFT system, which has been the system it's been run on forever?
Yeah, I think the bigger thing here is that we now have technology that does prove to be better for doing some things that we already have in place. I think the financial infrastructure what did we learn from, Robinhood and GameStop? We got to see the plumbing. We got to see how the plumbing of the financial system works. Not enough talk about that, right? You got X days to clear because of clearing corporations. You don't have time to get into all of it. And it's just like, but I can send $5 billion in Bitcoin from A to B, or use Ripple or use a token to get this done. Yeah. And, people are like, oh, there's something better out there. Guys, it's hundreds plus year old banking system with lobbyists and political power. And do you know how much money these banks have and how much political power these banks have? You think you're just going to go disrupt how they make their money and how they do their business? They'll let you disrupt them when they're good and fucking ready to be disrupted. And that's the truth. So you're going to build a parallel system. A parallel banking system is being built alongside of a traditional system. It is latching on to that traditional system and forcing the hands, right, of central bankers to pay attention. And they're either going to adopt their own version, right, because they're not just going to give up control, but they're going to get their own. Every bank in the world is likely going to have its own form of digital banking through digital currencies to be competitive. And there'll be multi-chain ways in which, that needs to be solved. Too many different blockchains that don't talk to each other. So we're ways off. That's where my mind's at. It's where your mind should be at, if I don't mind saying so here. It's like, this is expansionary. This is infrastructure that needs to be built. I always laugh, when people are like, oh, we're going to build this. It's like, yo, there's not even a pathway to get, that's out there, but you got to build a pathway to get there first. So let's chill.
Yeah. That's good stuff. Daniel's got a very sophisticated question. Daniel's the man. He's one of my private community members too. Can you point to a tech innovation which the first iteration was what eventually because broadly used? The internet is in its fourth and sixth iteration. Think Lomega zip drives. Does BTC? So yeah,
I had a zip. There's Jazz drives too. It shows you what kind of computer nerd I am. Those zip drives, 100 megabytes on a zip disk. That was huge, guys. Now you got flash memory things. Let me break this one down. Daniel, you got all the good questions. Fourth and fifth iteration. Does Bitcoin have decades? Yeah, I think at least a decade. At least a decade to really tool up into something that everyone says Bitcoin, like it's omnipresent. It's just getting there, and that's what makes this all so exciting. Take solace or take comfort in the fact that here's what I want you to know: big changes, big systemic changes happen really slow. Right. And I've learned in my profession, if you're doing a big deal or going for a big account, like these things don't happen overnight. A lot of thinking, a lot of building, a lot of, confidence needs to be built up. So big deals, big things happen slowly. But in the terms of like Bitcoin and infrastructure around digital money, things move faster than they've ever moved before. I know that sounds contradictory. Big things move slow, but relatively speaking, they're moving faster than they ever have.
Gotcha. So Doug's got to run here in about 5 minutes, so we're not going to be able to get through every single question. But Doug, before you go, no, this has been fun. And time flies when you're doing this too. And but I want to talk about NFTs. We've kind of alluded to it a little bit in Web3. Somebody had a question about Jack Dorsey even going with Web5 now.
That was a joke.
Yeah, I don't know if we can maybe talk about that in conjunction with this. But
I'll come back on the show whenever you want.
Awesome, man. Awesome. So bringing NFTs to coffee. Tell me about what you're doing here with CryptoDrip. And
Right.
with this, I also want to get your thoughts before you head out, just where you think NFTs are going. I mean,
Yeah,
so
yeah,
many
yeah.
people have different opinions on that too. So
I'll go a few minutes over. That's not a problem, and I really do want to handle these. So, CryptoDrip is my Web3 project. My wife and I and another partner have been working on. I love coffee. That's one of my hobbies and passions
too,
is
dude.
making making pour overs, buying beans. It's all fun stuff to me. And I was thinking, very out loud, and where, like, how does crypto and coffee and really NFTs? So this is when NFTs were becoming very popular, and I was buying them just to see what the vibes were, and obviously I thought it was ridiculous at first. I'm like, all right, let's stop being emotional about it and go, buy a cryptode. And I'm a big cryptode, community fan here. And made panic bought a toad and started to go into discords and learn more and more about what NFTs were doing here, and I did expand my mind and my world around the space. So this project, particularly, the big aim, is to build a decentralized coffee reward system that basically you can go to any cafe that participates, give small cafes and roasters the opportunity. So disrupt Starbucks star reward system, right? So they
Gotcha.
built that within their own ecosystem. Why can't I take a token reward, go to my local cafe, use it there, and go halfway across the country to another local cafe and use it there? It gives those cafes a competitive advantage. It gives them economies of scale. We can do a lot of stuff in that space. Okay, guys, that's tokenomics. That's DAO. That shit. That's like so far down the road. Like that's like 5-10 years from now if we're lucky, and get there. But what are we doing today? I'm bringing e-commerce, traditional Web2 e-commerce, and NFTs together. You're going to see a lot more of this. I needed Web2, Web3 bridges to exist because shit, guys, you're going to get your mom or your neighbor to go buy an NFT. Think about this for a second. Go buy ETH on an exchange, set up an account on exchange, buy ETH, put that ETH into a MetaMask wallet. What? Get that MetaMask wallet to then go, mint something. What the? You've never, get the fuck out of here.
Yeah.
Like, no one's doing that. No, we'll do it. We're nerds. We'll do that all day long. But what
For
percent
sure.
of the population, by the way, coffee, 1.25 million unique cups drink per day. So 1/8 of the global population drinking 2.25 cups on average. Yeah,
Wow.
because it's a drug, because it's caffeine. Illicit things get the global population doing them. But this
Yep.
one's pretty much legal. I thought, what a great way to focus on mass adoption by getting coffee drinkers and crypto together in one place. And what we're building in this e-commerce, so I'm building an online coffee shop that you connect your digital wallet. We've built out a way to recognize what NFTs you have. So we are going to make private label whole bean coffee from roasters that we have relationships with. You can drop ship right to your door. And if you own a token, a particular community token, for example, Cryptodes is the first community that has signed up to get their own. And you can, I didn't post it yet. It's still behind. Still haven't debuted it. So if you own a Cryptode, you can go to our store, connect your wallet. First 100 bags are going to be free. We know you have a toad, and we can assign discounts and coupons to anything. So we're basically private labeling whole bean coffee for NFT communities. They need utility. If there's ever a time to give your community utility while you build out your roadmap, you might as well give your community coffee. So we did some fundraising, I guess for lack of a better word. This is we auctioned off 20 NFTs to get the funding we needed to build out our Web3 project. So again, I'm doing it because I'm rushed. A pretty bad job here. If you're an NFT community and you want to give your members coffee, and unfortunately this is for US only because roasters are based in the US, you basically would go use this as you would any online coffee store, any e-commerce store, connect your digital wallet, and depending on what you're buying, and you'll get a discount for that. So communities can work with us. We can get roasters involved. So this is Web3 coffee as I see it, and hopefully we'll get this all the way out to a decentralized coffee reward system.
I love it, man.
Mm-hmm.
That's super cool. And there's a project I've worked with in the past called Devour. I'm not sure if you've heard of them. Dude, check them out. I think there would be a way for you guys to collab, and I'd be happy to make that happen too. They're great people. They're kind of doing a reward system with small restaurants, small business restaurants.
Yeah,
It's awesome, dude. Yeah. So Check them out.
We're gonna see this. By the way, Shopify is no dummy here. They're already, so this is called token gating, guys. So we basically built from scratch token gating for buying Web3 coffee or buying real coffee. Shopify knows what's up. They're working with some blue chip collections to do this. Manifold built a Shopify plugin to do some level of token gating. We were going to use that originally, but it just didn't give us the full scale features that we need. So when the big boys like Shopify are building out token gating for e-commerce, and we've been building this out ourselves through WooCommerce on our back end, it's going to be super cool. I hope everyone loves coffee. If you're a community, and you need utility while you're building out your stuff, hook your members up with coffee. I know you got ETH in the treasury you don't know what to do with. So coffee is the answer.
Dude, I know you got to run. Thank you so much for popping in, and thank you everybody out there for listening. Really, really appreciate everybody out there. Hopefully you gained value here in this live stream. Parting ways, or parting words rather, as we part ways, just things to consider here in the markets we're in, and anything you want to say to just kind of close us out.
Sure, guys. My favorite line would be, there are very few things in this world that you can learn with relative ease that have the ability to radically change your life. And personal finance is one of those things. So start with the really boring stuff. We talked about it at length today about protecting yourself and really just having great foundational and foundational pieces in place of your personal financial life. Knowing cash flow, building those cash reserves. Guys, that's like 70% of it. Get really, really good at that so you can go take advantage of the opportunities that are present and will continue to be present over this next maybe 1 to 3, 4 years. And that's any asset class for, mostly, we're talking stock market here, even crypto, if that's where your mind is at. Always do your own research and make sure the decisions you're making are right for you. But again, getting really good at foundational concepts of personal finance is what's going to keep you rocking for your rest of your life. Ignore that stuff. It could be dicey out there. Follow me on Twitter. If you like finance jokes, you can see, the memes and shit posting are strong with this one, as well as Instagram too. Appreciate your follow over there. Anyone needs any help, hit me up. DMs are open.
Doug, appreciate it, man. And thanks again to everybody out there. And we'll definitely be in touch. I think the people want more of this, and great value, man. Appreciate it. Have a great one.
Thanks. You got a great audience. Love everyone in it. Talk to you soon.
Thanks, man. Talk to you. All right, guys, that was Doug Boneparth. Hopefully you gained some value here today. Really, really want to just say thank you to him. Thank you to everybody out there. And Scott, appreciate that, man. And I like his financial advice. Sell drugs. Daniel says that's awesome. Chris says amen. Yeah, so we'll definitely try to bring Doug back on the channel sometime in the near distant future to talk more about personal finances, and we can get into crypto a little bit deeper. But I thought that was a great, just overall, kind of way to really track your personal finances. And it's a time to really focus in on the fundamentals. That's kind of what I've gathered from with inflation the way it is, with recession fears the way they are. So again, thank you all so much for tuning in. Hopefully you gained some big time value in this one, and hit that like button on your way out, and appreciate everybody being here this afternoon or this morning, depending on where you are in our world. So thanks again, and have a fantastic rest of your day or night, and I'll see you all in the next video.